Now for our feature story of the day, breaking news, peer-reviewed paper led by Dr. Murray Rudd shows that Bitcoin's on track to surpass 1 million per coin by January 2027, with the potential to hit multi-millions of dollars by 2030. And here's actually a post shared by Dennis Porter sharing this actual peer-reviewed paper, and I'll read you some of the highlights, and we will discuss this, and we will discuss Bitcoin hitting $1 million. As you know, my personal bull target for this cycle, which is for this year, 2025, is $1.1 million. That's my bull scenario based upon mass adoption from the United States, the stockpile making the executive order to purchase the million Bitcoin, which Cynthia Lummis proposed, and then other nations following in their footsteps as the global hash wars continue, in which was predicted from Max Kaiser. Max is calling for 2.2 million in play. If you missed my podcast yesterday, that was the featured story. We discussed why Max believes we'll likely hit 2.2 million per coin and what catalyst would send us to such an extreme price appreciation, which is ultimately like a 22x from where we're currently at. But anyways, let me read you some of this supply and demand framework for the Bitcoin price forecasting. And I also have the actual entire report, like the entire study pulled up here too, but it's probably very long. So I'm just going to read you some of what I see here, and bear with me, and then we'll discuss it. And you let me know your thoughts. Do you think we can hit $1 million per coin potentially this cycle, whether this year or in the next couple of years as predicted here? Do let me know. But I'm going to start here, and I'm just going to read this out loud and shout out Dr. Murray Rudd, who actually produced this along with Dennis Porter of the Satoshi Act and helping usher in nation-state adoption. And he's also doing so at the state level. So he's all about helping, the strategic Bitcoin reserve, whether from the nation-state level or, the individual state level. So here we go. Supply and demand framework for Bitcoin price forecasting. See if I click on it. Actually, it'll be easier to read this way. We developed a flexible supply and demand equilibrium framework, and I'm just reading it to you, the report, that can be used to develop the pricing models to forecast Bitcoin's price trajectory based on its fixed, inelastic supply and evolving demand dynamics. This approach integrates Bitcoin's unique monetary attributes with demand drivers such as the institutional adoption and long-term holding patterns. Using the April 2024 halving as a baseline, we explore model scenarios with varying assumptions about growth and adoption and supply-side constraints, calibrated to real-world data. Our findings indicate that institutional and sovereign accumulation can significantly influence price trajectories, with increasing demand intensifying the impact of Bitcoin's constrained liquidity. Forecasts suggest the modest withdrawals from the liquid supply to strategic reserves can lead to substantial price appreciation over the medium term. While higher withdrawal levels may introduce volatility due to supply scarcity, these results highlight Bitcoin's potential as a long-term investment and underline the importance of integrating economic fundamentals into forward-thinking portfolio strategies. Our framework provides flexibility for testing different market scenarios, demand curve function forms, and parameters, offering a tool for investors and policymakers considering Bitcoin's role as a strategic asset. By advancing a fundamental-based approach, this study contributes to the broader understanding of how the Bitcoin supply-demand dynamics influence the market behavior. The keywords: Bitcoin, inelastic supply, economic modeling, inelastic supply and institutional adoption, price forecast, strategic reserve. And here's a bit of an intro. I'll just read this to you and then we'll discuss it. Introduction: unlike fiat currencies, which are susceptible to inflationary debasement pressures, Bitcoin's immutable 21 million coin supply and independence from the central bank position is a decentralized, independent, enduring, unique store of value. This may offer investors a tool to mitigate systemic risks arising from inflation, government overspending, and unsound monetary policy, and has important implications for portfolio allocation decisions. While Bitcoin also serves other purposes, acting as a speculative investment and through layer 2 innovations such as the Lightning Network, a medium of exchange and recent influx of institutional investors, and low movement in coins held by long-term investors, imply the increasing importance of Bitcoin's role as a global store of value. And actually going to the website to open this up, let me scroll and just see if there's anything in particular. So the segments are, there's the introduction, which I just read the intro of the intro. There's the background. Then there's the Bitcoin liquid supply. There's the modeling options, I guess, talking about stock to flow, as well as energy-based valuation models. Also discusses macroeconomic models, the network models. So this is a very detailed report. Also, it shows you the power law models here, which we cover from time to time on the show, quantitative statistical models, supply demand equilibrium models, the methodology for the framework and context, Bitcoin supply curve, and as you can see here. So again, very detailed report. I don't have time to really read all this to you, but I will link to it in the description in the show notes. So make sure you guys check it out, and shout out Dennis Porter, and let me know, fam, what are your thoughts surrounding this model suggesting $1 million per coin by January of 2027 with the potential to hit multi-millions by 2030. Let me know, fam, and I'll read your comments out loud. Welcome everyone to the Q&A segment of the live stream.